Hi, JJ here with the Art of Value. This is a Spotify earnings update for October 2022. Full disclosure, I am a Spotify shareholder, so I've spent quite a few hours going through the latest earnings update. I've listened to the earnings call, so I thought I'd share it with you. Alright, so if you are on video, you'll be able to see on screen I've got some financial media headlines after the earnings just to see what they picked out. It's interesting to see. It's not necessarily how the company's actually doing, but it's interesting to see what they've picked out. So the first one says, if you're on audio, I'm going to read it out. It says, Spotify top subscriber forecast sees margin pressure this quarter. The next one is Spotify boosts subscribers and revenue, says 2023 price increase is likely. As Spotify stock sinks, CEO suggests raising prices for US subscribers. It's Market Watch. Reuters says, Spotify profit margin squeezed by slow ad growth. Stock sinks. Another one is Spotify reaches 456 million total monthly users in Q3, up 20% year over year and topping expectations. So quite a positive one there, picking the positive aspects out. And another one, Spotify beats revenue forecasts, but ad growth slows. As we'll see some other companies that's happening this earnings season. Google just come out with YouTube as slowing ad growth. And this is from a few days ago. I saw this headline saying Apple's price hike is music to Spotify's ears. And Danial Ek talked about that in the earnings call. He was asked a question about price rises. So Apple's raising their prices for their competitive offering to Spotify. And so Spotify's thinking of raising prices as well. And that's kind of a good thing. If your competitor raises prices, it kind of gives you the chance to do it yourself. So looking at that Apple price rise in a bit more detail, because I think Apple is actually Spotify's main competition. It's the big behemoth, and it can in some ways try and stop Spotify, which it is with they're having problems with the App Store, with Audiobooks, which is a new offering. Apple obviously doesn't like it and is trying to stop it. And Danial Ek has an article in the New York Times talking about that. He's trying to stop Apple from being such a gatekeeper to them. But anyway, the article says here, this is in the Financial Times, says Apple says it's raising prices for its TV plus music and services bundle subscription for the first time since their respective launches, becoming the latest consumer tech group to increase fees for customers. The iPhone maker increased the price of Apple Music by $1 to $10.99 a month, citing an increase in licensing costs, and said artists and songwriters would make more money as a result. Family plan prices went up $2 to $16.99 a month. We'll see what Danial Ek said in the earnings call about Spotify possibly raising prices. As an investor, raising prices, having pricing power is not a bad thing. Let's have a quick look at the share price action of Spotify. Of course, last session, big tech, Google reported, Microsoft reported, and Spotify reported after hours, and then the stock prices plummeted this session. Spotify went down to 13%. And also in the last 5 years, we can see I've got the graph on the screen. Since the peak, Spotify has dropped 76.85%. So it's come down a huge amount. Is the business actually doing badly, or is it doing well? That's why it's good to see into the earnings and see what's actually happening inside the company, because the market price, the share price is one thing and the fundamentals of the company are another. Looking quickly at a slide presentation that the company had for earnings season. So what they pointed to is the active users, which is up 20% year on year, which is good growth, and it's well on target for what Danial Ek is trying to hit. And it's the main thing they're trying to do is grow. It's a typical tech company thing, just grow as big as possible. Think about profitability later. And it would be concerning if you think about what's happened with Netflix if user growth had gone down, but it's not. They're growing really well. And so they've got 195 million subscribers as well, which is up 13% year on year. So basically the user growth and subscriber growth is going well. It's on track. If you're watching on YouTube and you're getting value out of this episode, please consider liking to help the channel grow. Thanks, I really appreciate it. So the next thing that they pointed out as a highlight is that they're building the world's #1 audio network, which is kind of talking their own book there. But what is interesting that they've started audiobooks in the US. They've started having their audiobook vertical, which they talked about at Investor Day. I made a video about that. Go back and look at that. I covered the whole Investor Day earlier on in the year, and Danial Ek referred to that throughout the presentation, telling investors and analysts to go and look at that for various things, because they asked questions that they could have been answered there. And the other one is they've bought Hurdle. I'm a Wordle user. I use it every day to keep my mind active. Quick word puzzle, and Hurdle is a similar but for music. Then Spotify's bought it, so that'll be fun. Another thing they pointed out is empowering creators and connecting fans. And one of those things, if we look here, is they made video podcasting available to Spotify for creators in Germany, France, Italy, Spain, Brazil, Mexico. Now, I've had it available to me for quite a long time through Anchor, so they're going global with it, letting creators create with video, sort of like a YouTube competitor, really, if you think about it. But what I do is I record a video, upload it to YouTube, and upload it to Spotify at the same time, and Anchor distributes it through audio version as well to Apple and other podcast networks as well. So it's pretty easy, and it'd be interesting to see how that goes for Spotify. I mean, I like it, and it's incredibly easy to use. So just looking at a quick financial summary, it's looking at the actual numbers. It's interesting. I think some analysts were disappointed, which is probably why the stock price went down. But I think if you're thinking long term, it's pretty well on track. If we look at the highlights, revenue grew 21% year on year in Q3, or 12% year on year constant currency. They said that's reflecting premium revenue growth of 22% year on year, on 13% year on year constant currency, led by subscriber gains, and ad-supported revenue grew 19% year on year, led by podcasting. Profitability, gross margin was 24.7 in Q3, down 201 basis points year on year. So that, I think that's the concern, that the gross margins were being hit, and some investors not happy about that, some analysts, but they've always said that. Danial Ek pointed to the Investor Day saying that was expected because of what they're investing in podcasting, and what they said, it should rise in 2023. So it will be really interesting to see if that happens to the company, to the financials in next year, as all that investment in podcasting starts to bear fruit with the margins, when they're not investing so much and they're starting to get a bit of gain back from podcasting after investing so much and putting so much work in. So if we look at the gross margins, we can see it was 24.7%, which was down for total gross margin, and premium gross margin was 28%, down a little bit from Q3 2021, and ad-supported gross margin was 1.8%, which is down from the last quarter. But they said the ad-supported gross margin was 1.8%, down 902 basis points year on year, reflecting favorable revenue mix shift toward podcasts and marketplace growth. So they said that will bear fruit over time, shifting to podcasting where margins should be better than in music. In free cash flow, they said this is the 10th quarter in a row of positive free cash flow, but if you're watching on video, you'll see it's down a little bit this quarter. They said this was the 10th quarter in a row of positive free cash flow. While the magnitude of cash flow can fluctuate from quarter to quarter based on seasonality and timing, we have averaged over 200 million euros of positive free cash flow on a trailing 12-month basis for the past 3 years. Now, I found these graphs interesting. They're the monthly active users, the all-important monthly active users, which is going up, but the mix around the world is interesting. You see that Europe, it's 31% at the moment, North America 22%, Latin America 21%, and rest of world 26%. So it's a good spread across the world, a truly global company. It's not just kind of focused in the US or focused in Europe. It's kind of spread out, and they've got a good even mix. You don't really see that with that many companies being so totally global, and of course they're focusing more on different emerging markets. If we look at premium subscribers, we see it's similar, but it's 39% in Europe, 28% in the US, 21% in Latin America, and the rest of the world is 12%. So there's more to go there. Fewer subscribers in rest of world, which is kind of more emerging markets. There is a lot in Europe and in the US, of course. More on audiobooks. They said at the end of September, the ability to purchase and listen to more than 300,000 audiobooks titles became available to Spotify listeners in the United States. This is the first iteration of the audiobooks experience for users on Spotify and fits seamlessly alongside pre-existing music and podcast content. So that's their new vertical audiobooks, and it will be fascinating to see how this goes. They're planning to add more verticals as they go along, which I think makes the potential to have to be a very big company over, say, 10 years with a number of different verticals and music only being one part of it. But also all-important podcasting, which they have, of course, developed before audiobooks, and it's going pretty well. They say about podcasting, at the end of Q3, we had 4.7 million podcasts on the platform, including mine, and the number of MAUs that engaged with the podcast grew in this substantial double-digit year-on-year, and per-user podcast consumption rates continued to rise. The other thing is the two-sided marketplace, which they reported on progress there. It said that during the quarter, sponsored recommendations continued to exhibit strength with triple-digit year-on-year growth in total campaign volume, and in Q3 we saw the largest campaign to date for the service. So that seems to be going well. It's can be a little bit controversial, that double-sided marketplace, but it seems to be going well for them. So for their outlook for the next quarter, it's more growth. They say that the total MAUs are expecting to grow to 479 million and total premium subscribers to 202. So continued growth there, and total revenue 3.2 billion euros and gross margin of 24.5%. Now turning to the earnings call, I always find it fascinating to hear Danial Ek talk about his vision, his long-term vision for the company. No matter what the share price is doing or what analysts think, he does have a long-term vision. It reminds me of Jeff Bezos, who I know he kind of not idolizes, but he's a follower of Bezos and the way that he built Amazon. So he said, it was another solid quarter. User growth and subscriber growth keeps humming along very steadily. I have said it before, but it can't be understated. Top-line growth in the platform is the leading indicator for future success on all other financial metrics. But I want to start by addressing the macro environment, which I know is top of mind. There is a lot of global uncertainty. Yes, there sure is. A lot of companies are feeling that, a lot of tech companies. But for Spotify, our business continues to perform very nicely around the world. Outside ads, we weren't seeing much impact at all, and the ads business is still growing, and it will be important, but remains a relatively small portion of our overall revenue today. As we saw with Google that reported in the last session, and it plummeted, in Amazon, all the companies that are affected by online advertising are kind of going down. So Spotify did see some softness there, but it wasn't too bad, and it's not a huge part of their business yet. I think they're lucky enough to have ad business and subscriber growth. When you look at Netflix, they're going to have to get into advertising. It's a challenge, as I said in the Bill Ackman video episode that I did recently, where he sold out of Netflix because he saw that advertising was going to be a massive challenge for them to do, and he wasn't sure if they could do it, so the risk profile grew. But of course, Spotify's had advertising all along, and it's even with podcasting, it's ramping up. So it could be a big part of their business. It probably will be, but they do have subscribers as well. They've got a number of different revenue streams actually that they're developing. So Danial Ek says, if you recall, at our last Investor Day in June, I said that I suspect many of you think Spotify is a great product, yet at the same time, you may also think we are a bad business, or at least a business with bad margins for the foreseeable future. Our Q3 results clearly show that our investments in the product and experience have resulted in strong user growth, retention, and increased engagement, but they've also been a drag on near-term margins. Just to remind everyone, he says, this is all consistent with the strategic decisions we communicated in early 2021 and again at Investor Day. And as we've said, we expect this drag on margins will start to reverse in 2023. So that will be fascinating to see whether it does in 2023, where the kind of rubber hits the road, where they've actually said that margins will improve in 2023. So we'll see if that happens. And they have said that all along. As I said, I did an episode about Investor Day, which I encourage you to go and look at, which goes through the whole thing of what the vision and where they're going and the verticals that they're planning to get into and all that. It is worth having a look at that if you're interested in Spotify, the business, the company. How do you think Spotify is going as a business so far? Let me know in the comments what you think, if there are any problems that you see in the business or for these earnings or just in general for the business. Do you think Spotify is going to be going to work out well long term based on fundamentals, not the share price, obviously? What do you think of Spotify? And again, he did talk about this at Investor Day. The lifetime value of a user is the primary tool we use to inform our business decisions and judge whether our strategy and investments are working and achieving better outcomes. And the beauty of LTV, lifetime user value, is that it factors in the longevity, quality, and value of the relationship we have with our user. It's the critical metric to all teams at Spotify. We are consistently experimenting with what leads our users to stay longer, engage more deeply, and ultimately convert to our paid offerings. And what we've seen time and again is how sticky our users are because of the product and the experience we've created. I believe we have the lowest churn across our competitive set because of the many ways we keep listeners engaged and happy and therefore retained. And because of the strength of this relationship, we know that spending to acquire new users is a worthwhile investment that over time will have a meaningful return. So I know that was a kind of long quote, but I think it's interesting that his vision is kind of always been the same and it's in place and it is sticky. If you use Spotify yourself, as a lot of people do, well over 400 million now, that you find it is sticky. I mean, I use it every day for podcasts and music. I do use Audible for audiobooks, and so it will be interesting to see. I think that's a main competitor, going to be a main competitor to Spotify. So we see if what happens with audiobooks. This is where Danial Ek talks about the margins, the gross margins. He said, "We've been transparent that 2022 was going to be an investment year, which would result in a drag on our gross margin in the short term. This quarter is case in point, but it shouldn't come as a surprise. Nothing has changed with our fundamentals. Our business is strong. We are heading into 2023 with more cost certainty, stronger product, and a better user position. So this is all playing out largely as we expected, despite the macro environment. Our confidence in our ability to meet our long-term goals and the ambitions we laid out at Investor Day remain unchanged. And based on the strong demand for our platform amongst consumers and creators this quarter, I believe we can deliver." So basically it's all on track. And so I don't actually see, with these results, kind of to sum up, I don't really see any major problems at all. It is kind of on track, but the share price is plummeting, but kind of fundamentals intact. Of course, people are concerned about profitability, but I mean, it's a classic thing. If you think of Amazon, it was reinvesting, and it looked like they were making no profit. But if you looked at the business, it was doing well. And I actually do believe this is not investment advice at all, because obviously the share price has gone down a lot, and you do your own due diligence and research, but I do think that Spotify is a strong business and it will do well over time, but I could be wrong. It's always the most interesting part of a earnings call is the Q&A, where people have to ask questions, not usually very hard questions, but it's interesting. They talked about Apple increasing prices here. Danial Ek said, "We've also been experimenting with price increase. We have a significant pricing power to increase prices. Competitors increasing prices is good for us and will likely fare better. We'd like to increase US prices, and we're talking about it with US partners." So that's one of the headlines that we saw. He said, "On gross margins, could anything derail it? We expect to see improvements in 2023. Podcasting has been a drag as expected. Guidance remains the same for expectations. Macro could impact the speed, but not the trajectory." For music and podcasting, on a question, he said there are two major parts. Podcasting will have better margins. Music, raising pricing will be accretive. We're very bullish long term. We'll get to the numbers that we plan to get to. He said, "We're feeling good about marketplace business and the ticketing for live events. That's another revenue stream. It's early days." There's a question about Spotify being an all-you-can-eat business where if you're a subscriber, you pay and you kind of get all you can eat. But they do have a la carte offerings, like the ticketing is one example, and audiobooks is paid for separately. I just wonder if they'll include that for a price, all audiobooks. That's something I'd be interested in if I could have access to all audiobooks, podcasting and music. That'd be a pretty powerful offering, I think. He talks about the problems they've had with Apple as well. He said Apple keeps putting up roadblocks, stopping us more and more. The audiobook app has been rejected 3 to 4 times. They keep moving the goalposts, and they said if you contrast with that with Android, which has been it's an easy and smooth experience, and he says it's absurd that Apple is holding us back, and it's bad for consumers, customers. Danial Ek's trying to make a lot of noise about that to make it smooth, for regulators to actually do something about it. Apple is obviously concerned about Spotify as a competitor, and rightly so. So as one of the key takeaways to finish it up, Ek said that revenue mix will shift from more podcasting and audiobooks. Gross margins will be higher for those, adding up to overall improvement of margins. So that's addressing the concerns that analysts, investors have right now about margins. Will they ever improve? He's in fact seems very confident that they will over time, especially in the other verticals that they're working on, which have higher margins like podcasting and perhaps audiobooks and whatever else that they have in the future. He said they're planning a number of verticals. All right, that's it. So if you've enjoyed this episode, if you think you got value out of it, please consider subscribing on YouTube or on your favorite podcast app. And Spotify, follow and subscribe, whatever the app allows you to do. And I'll see you next time.